Hello YouTube, it's Harry from HGL Finance and welcome back to yet another video. Haven't been a bit busy the last few months and not made a video, but thought I would come back with a different type of video, something slightly different to what's been on the channel previously, but about the same topic. So what I've done is I've asked ChatGPT, I've given it the prompt that I make YouTube videos about Trading212 and what would my viewers want to see me talk about. I'll put this on screen. I thought might as well, AI is dominating the markets, might as well use that here. And what we're doing is going through the 10 questions it has suggested me. I haven't looked at these questions yet, but I've had a brief look at a couple of them, but there's some that I haven't looked at. But what I'm going to do is go through them, hopefully do it pretty quickly, and just give an off the top of the dome. I haven't done any research for this. Thoughts for the 10 questions. Let's see, are they what you want to see? And let's see what I think of them too. As always, this isn't trading advice, but I have to put that out as a disclaimer. But if you like this content as well, please like, share, and subscribe. Let's get into it. So question one, I've got them on a device here, is Trading212 for beginners, a complete walkthrough. I have done a video on this. If you go onto the channel, you will see that. It's saying it talks through account types, buying your first ETF or stock, and pies, auto invest fees. There are videos on this channel. This is a sort of Trading212 beginners investment type channel. So I'm not going to answer that question. It's not really a question anyway, but that's that. Do check the previous videos on the channel. Second up is my Trading212 portfolio breakdown. What I'll do is I might put some pictures and videos on the screen, I might not. But essentially, I started doing penny trading for a little bit. I started doing swing trading for a bit. So buying shares, holding them for a sort of 1 week to a month sort of period, more volatile stocks, and then selling them hopefully for profit. I found that this was too time consuming. I worried too much about the stocks, and due to work commitments, it was a pain to keep checking them during the working day, and I didn't really want to. So I've given up on that, and at the moment really have resorted to just putting my money in ETFs really within Trading212. So I hold the VWRL, which is the Vanguard All World ETF, and I also own an iShares Gold ETF. And more recently, I've also been buying a silver ETF that's done well, and I also have a semiconductor ETF also, which is an iShares one. And then from memory, I don't have my portfolio up in front of me, but just got the questions. From memory, I have a couple of single stock positions I'm trying to get out of, which are only small amounts. And that was, I have Wix, the online platform, website building platform, and a couple of others, but I will just be sticking with ETFs going forward, and will sell all of them hopefully when they get back to somewhere around the value that I bought them for, because I am underwater in those. And I guess it also goes to say that with Trading212 I have the majority of my holdings within cash. In the QMMF, getting at the moment 3.8%. I think, some of the indicators like the PEs across the SP 500 and others does suggest that the market is overvalued, and I'm waiting for hopefully a pullback to put some more money in. But I've just been dollar cost averaging in otherwise, and that's what I've been doing there. I don't think the AI particularly is a bubble per se, but we're just at a natural high. The markets have rallied a lot. Will they continue? I don't know. So at the moment, holding a lot of cash, and that gives me flexibility. Question 3 is common Trading212 mistakes that beginners make, saying to talk through overtrading, chasing hype stocks, amongst other things, ignoring diversification, and panic selling. So panic selling is something I've definitely done. I held a semiconductor ETF that dropped about 50% within a few weeks of me owning it. I then sold it at about 6 pounds. I bought it at about 9, dropped to about 6. I sold it at 6, and then dropped to about 4.5, and now it's worth about 13. And really, I think these are things like Nvidia. These are massive, blue chip stocks. I think it was always a relatively safe investment. But when I was a beginner, the volatility wasn't really. That was the first sort of large pullback I'd had on any position that I'd had. That was the most volatile ETF that I was using. So yeah, panic selling is a massive thing. I think, do your research. There are definitely times to sell out of things, but in the long run, if you hold things, as long as you invest in good stocks to begin with and good ETFs, they should generally pull back. It's just market cycles. You have to get used to. Ignoring diversification, it says as well. That's a more basic one. I think most investors at this point know about diversification and the benefits of it. ETFs are a great way of doing that. Don't have to create a portfolio yourself and understand how to create a diversified stock of individual portfolio of individual stocks and look at what's correlated and positively, negatively, and other things. You can do it via ETFs. They're a great way of doing that. And I think because of ETFs, most people do really have diversified portfolios nowadays. Over trading, I don't think really is a massive issue. I don't think that's a massive thing. Chasing hype stocks, that it suggests, is a much more of an issue. I've done it before. I think most people have done it before. I think social media like this, not necessarily this because I'm not promoting individual stocks, but people on TikTok especially promoting things such as rich tech robotics and other, TikTok stocks I've called them. I've done a video on that before. Does create hype. People often get to these stocks too late when the run has already happened, and then they end up as very volatile. People sell them, and they lose a lot of money. And the bigger issue is that people invest without knowing fundamentally what the company does, whether it's understanding its financial position, its prospects. They just do it because they're told to, which is not a good thing. So that's an issue there with that one. So next up, how I'd invest £1,000 on Trading212, step-by-step allocation, risk level assumptions, ETFs versus individual stocks. As I say, this is not investment advice, but generally, obviously do your own research. But I would suggest if you are putting your first £1,000 into Trading212 or any investment platform, put it in an ETF. Look at things that are diversified, such as VWRL, which is the FTSE All World, and things like VUSA, VUSA, which is the S&P 500 top 500 stocks. These are simply a lot less volatile than which is measured by beta, which you can see on a lot of these platforms. Then the vast majority of individual stocks, pretty much any individual stock, will move far more than any of these the ETFs that I've mentioned. And I think that's what I would do if I was starting again on Trading212. But it is completely it is your risk tolerance, risk level, risk appetite, all these sorts of things that you have to work out yourself what you want to do. Don't just do what I say to do, but do your own research. Dividend investing on Trading212, is it worth it? So for me, I don't dividend invest, but that is because of the taxes, the way the taxes work where I live in Jersey. Dividend investing is very reliant on your specific situation, on what you want from investing, and also things such as the tax systems where you live. If dividends are taxed at a certain rate or not, or capital gains is or isn't, has an impact on that. Personally, I don't generally pick stocks, or have done ever, because of the dividends that they give. But dividend stocks is a worthwhile method of investing for some people. There are dividend pies on Trading212 and other things of stocks that do pay regular dividends, but dividends aren't always guaranteed. You can look at the dividend yields of companies. It doesn't mean it's going to continue. Past performance isn't necessarily a guide for future performance, but it is a way of investing that is relatively common, but I don't think is as popular as it maybe has been in the past. So question 6, ETFs only, Trading212 portfolio, 3 to 5 ETFs you choose, why ETFs beat most investors, long-term return assumptions. So long-term return expectations, the S&P 500 is around about 8% a year. That's the sort of gold standard ETF, top 500 companies in the USA, which is the VUSA platform, the ETF, and that's a very good starting point for people to do their research on for investing. That's one I would definitely say to look at. ETFs beat most investors. If you look at professional investors, with all the knowledge and time that they have, often they can struggle to beat a simple S&P 500 tracker, and that is for many reasons. But really, it is hard to beat the S&P 500 as a starting point, especially if you're just wanting to beat the interest you get from a bank account, say a 2, 3, 4%. If you want to beat that and do it over the long term, which is more investing rather than trading, being more short term, that's the way to go. And 3 to 5 ETFs. Well, I guess on the beating most investors point of view, often there's a lot of research that shows that dead people have better investment returns than alive people, which is because they don't tweak their portfolio as much, or they don't at all because they're dead. But that's the thing with these, you really want to invest over the long run. That's what this channel is about, really, more than it is trading. So it's stick to something, dollar cost average in, remove a lot of your volatility. It's a great thing as well to look at. And 3 to 5 ETFs you choose, I've already covered. So Trading212 is number 7. Trading212 versus Free Trade versus Vanguard. This would be best as a separate video, but Trading212 is a good platform, has a good track record. It's beginner friendly, it's got a good app. The fee structure is very good, which is a very important thing. Vanguard has a lot more mixed reviews. As a platform, Vanguard only allows you to invest in Vanguard ETFs, which Trading212 allows iShares, Vanguard, other things, which is why I would generally suggest Trading212. And it also doesn't have any platform fees that Vanguard does. And then Free Trade isn't one that I've personally used, but shares more in line with Trading212 than it does with the Vanguard platform. But I think Trading212 is great. The interest it gives through QMMFs on uninvested capital is great, and that's something that a lot of platforms don't do. So that's really why I use it. And then question 8, how often should you buy stocks on Trading212? Lump sum versus DCA, which is dollar cost averaging, which we've already talked about. But that's investing over a prolonged period, to invest lots in little pieces at a regular interval, invest generally the same amount as opposed to lump sum investing. So how often should you buy stocks? It also suggesting time in the market. Myth, which is time in the market is better than timing the market, is what people say, and is generally true, which is just about, as I say, about dead people, is to keep investing in the market, to keep with your strategies over the long run. And it's being in the market for a long time that generally allows benefits from investing rather than trading over the long run. And my own investing routine, really, that is, for me, I just mainly on Monday invest in certain ETFs. I generally move my money around on a Monday and invest at the start of the week. There is data that shows that certain days are better than others, but I think really as long as you're dollar cost averaging, you should be benefiting, and the sort of the day-to-day swings should iron themselves out. And there are also ways of automating investments. Trading212 offers that, which is a great thing that the platform does. That means that you don't have to look at it, and I think really that is what is best. If you can set up auto invest and ideally not check your investments often, try and avoid checking them hourly, daily, then you will, I think, do better that way in the long run. So what I'm buying this month is question 9. Not specifically doing anything other than to continue DCAing into the what I've already said that I hold. Market conditions, I think, as I've said already, the market is more on the overvalued side, but I also don't expect a major pullback anytime soon. There's a lot of money on the sidelines, and that is bullish for the market really. And I'm investing in gold and silver quite a bit now, so quite a lot of money within that. And that's something that is definitely, there is more of a case for saying it's overvalued, but then again there's a lot of national government interest in that, so it's hard to say. And then number 10 is Trading212 safe. Honest review. Well, the answer I would say is yes, it is FSCS protected, up to 85k, which I believe has now recently changed, but it's not applicable in Jersey in my jurisdiction anyway. But they often offer cash ISA, stocks and shares ISA that are protected. It's compliant with the FCA, it's regulated with them within the UK, and I've never personally had any issues with them. The live chat and other things are very good, so I don't really have anything bad to say with them, and I really wouldn't worry about them from a safety point of view. It's not necessarily as safe, I would say, as a bank, but it is really, I think, as safe as any other investment platform, and I would say it's better than a lot of others in terms of safety, just because it's got more of a track record and it has a large user base. And if you check app reviews and reviews on Trustpilot, etc., it does do very well. But that's been me talking for about 16 minutes. I hope you liked this video. If you have any more questions, please put them in the comments down below, and I will see you next time.